Hey everyone, welcome back to The Explainer. I am absolutely thrilled you're joining us today because we are diving into something that could literally rewrite your financial future. We're zeroing in on a gorgeous property over at 4220 East Desert Marigold Drive, right in Tatum Ranch. We're going to use this exact home to break down a financial blueprint that is, well, it's pretty much revolutionary. We're talking about completely escaping the traditional mortgage trap and totally rethinking how your wealth, your cash flow, and your debt all work together.
Now, I want you to just stop and think about something for a second. What if everything we've all been taught about the classic American dream of homeownership, locking in that 30-year fixed mortgage, grinding out those monthly payments year after year, and just crossing your fingers that the math works out by retirement, what if that whole script was written by the banks, completely for the banks, and not for you at all? Because the reality is the traditional system, it's built around a rigid payment schedule, not your actual financial freedom.
Okay, let's really get into this 30-year amortization game. With a traditional loan, your early payments are incredibly front-loaded with interest. We're talking 60 to 70% of your early payments going straight to the bank's profit line. It's actually kind of brutal. By year 2, year 4, and year 8, the vast majority of your hard-earned money is literally just evaporating into interest. Even hitting the 10-year mark, a massive 70 cents of every single dollar you send in is still just feeding the bank. You aren't building wealth here, you're essentially just renting the bank's money at an absolute premium.
And this sets up a super painful reality that we call the 75% principal threshold. Ask yourself, at what point does 75% of your monthly payment actually start going toward building your own equity? Well, with traditional financing, assuming standard interest rates, you don't actually cross that line until year 25. Seriously, you are waiting a quarter of a century just to start building meaningful equity month to month. That's literally decades of lost financial momentum.
So how exactly do we fix this? Well, it requires a complete paradigm shift. Because look, most folks don't actually have a mortgage problem, they have a cash flow problem. In the old model, your income just sits completely idle in a checking account, earning basically zero, right? All while you're simultaneously getting hit with 6 or 7% interest on a massive mortgage balance. But enter the all-in-one, or AIO mortgage framework. This combines a first-lien home equity line of credit with a fully integrated sweep checking account. By using a 100% income sweep, every single dollar you deposit instantly drives down your principal balance, which drastically minimizes the daily simple interest you're charged. It just completely flips the math upside down.
All right, let's see how this actually plays out when we apply the AIO to exact real-world numbers for a family buying that specific property in Tatum Ranch. So the purchase price is $638,000. They're putting 10% down, which is $63,800, leaving them with a loan amount of $574,200. Now let's look at the cash flow, because this is key. Their monthly household income is $12,500, and their monthly spending comes to $9,500. So that leaves them with a positive cash flow margin of $3,000 every month. Keep these exact numbers in your head, because what happens next is basically financial magic.
Now, because the AIO uses daily simple interest and your whole income acts as a payment before you spend a single dime, your required monthly interest payment just plummets automatically. Watch this. In month 1, their payment is $2,874. But by month 12, it's already dropped to $2,667. Month 24, it's $2,432. By month 36, it's down to $2,182. Month 48, it's $1,917. And by month 60, their monthly requirement is just $1,631. The sheer velocity of this paydown is unbelievable, and it frees up more and more of your cash flow every single month. And because this family is aggressively driving down their principal balance every single day just by using their normal income, their effective APR plummets to an incredibly low 1.962%. There is simply no way you are finding a 30-year fixed rate that can even touch that. The speed of the AIO payoff is astronomical, and it effectively drops the true cost of borrowing to under 2%. Crazy, right?
Which brings us to the ultimate payoff reality here. Thanks to this absolute powerhouse of a cash flow engine, our family at Tatum Ranch will completely pay off their $574,200 loan in exactly 118 months. Yep, that is just 9.8 years, under 10 years to total financial freedom. And honestly, the absolute best part? They didn't have to change their spending habits at all. They still took their vacations, they still bought their daily coffees, they didn't change what they spent, they just changed where they spent it from. Literally zero lifestyle sacrifice required.
So the crucial point here is looking at the staggering contrast between these two paths. Let's fast forward to month 118. With the AIO, your new reality is a zero balance and a 100% paid off home.
But what about the traditional 30-year fixed loan? Well, you've been grinding out a fixed $3,535 principal and interest payment every single month for almost a decade. And guess what? You still owe $486,709.81. You are completely locked in for another 20 years.
The actual difference in the true cost of borrowing is just mind-blowing. On that traditional 30-year loan, over its entire life, you're going to pay $698,560.07 in interest alone. That's more than the original cost of the house. But if you're using the all-in-one, operating on daily simple interest and just leveraging your natural cash flow, your total interest paid drops to an incredible $185,944.07.
Which leaves us with this absolutely spectacular number. $512,615.99. That is the exact amount of interest saved by this one family in Tatum Ranch. Over $500,000? And guys, that is not some slick marketing gimmick. That is just pure mathematics at work. That's $500,000 staying directly inside your family's wealth ecosystem instead of just padding some bank's bottom line. But honestly, the massive savings are really just the beginning. The AIO is basically a financial Swiss Army knife. You can use the 100% income sweep to absolutely crush your daily interest, or you can leave idle cash reserves right in the account to act as a 24/7 interest shield. It even lets you do credit card arbitrage, meaning you float your expenses on a rewards card for 30 days while your cash sits there suppressing your mortgage. You can drop direct lump sum windfalls like an annual bonus to instantly cut interest, completely bypass the whole friction of amortization, and even consolidate your high-interest non-housing debt. Want to self-fund real estate or a business venture? You can do that too, all while completely bypassing those really costly secondary refinancing fees, offsetting seasonal income dips, and creating just massive bi-weekly compound velocity. It's truly a game changer.
Now, this brings us to a really important point: how we actually define safety. In traditional finance, if you aggressively pay down your mortgage, your money is essentially trapped. You literally have to go back to the bank and ask for permission to access your own equity. But the AIO, it gives you unparalleled liquidity. You get a full 30-year window granting continuous, penalty-free access to cash up to your original loan amount, and that applies during your entire paydown phase and long after the home is totally paid off. Perfect for emergencies or jumping on new opportunities. Because of this extreme liquidity, it's widely considered the most conservative loan in the USA.
Let's take this whole concept one step further. What happens after you pay off the house in those 9.8 years? Well, you take that old $3,535 traditional payment you would have been making anyway, and you redirect it straight into an investment, like say the S&P 500 earning a 10% return. By the time you reach what would have been the final day of your old 30-year mortgage, you've got a completely paid off house and a liquid investment portfolio worth $2,611,294.31. I mean, this is literally how generational wealth is systematically built.
So whether you're looking to purchase a beautiful new property like the one we looked at in Tatum Ranch, or maybe you're an existing homeowner feeling totally trapped by your current traditional mortgage, this system is absolutely for you. The AIO is just an incredibly powerful cash flow engine. It truly doesn't matter if your current rate is sitting at 3% or 7%. This is a velocity strategy, not a rate strategy. It's all about how fast your money is actually working for you.
Now, as always, I do want to quickly remind everyone that the information we're covering in this explainer is strictly for educational purposes. Every family's financial profile is completely unique, and of course, your individual results will vary based on your specific income, your spending habits, and market conditions. This whole case study is just a really powerful mathematical illustration of what becomes possible when you fundamentally change where your money lives.
All right, if you are finally ready to stop renting the bank's money and start reclaiming your own wealth, you really need an expert to run your personal numbers. Give Eric Walbot a call. He's a mortgage strategist and AIO specialist, and his number is 602-430-7519. You can also shoot him an email at eric@thepayoffpros.com, visit thepayoffpros.com, or check him out on Instagram and YouTube at @payoffpro. His NMLS numbers are 201-8707 and 1936984. Seriously, reach out and schedule a coffee meetup or a quick Zoom call today. The end goal isn't just to own a home, right? The goal is to own your financial future. So, are you going to spend the next 30 years building up the bank's wealth or your own? Thanks so much for tuning into this explainer, and we will definitely see you next time.